Hello there. I hope you are doing well and setting up for another good week in the markets. I'm sure there'll be plenty of volatility as we did have plenty at the end of last week with a decent sell off after a long ramp up, especially led by tech. And I thought this was a good opportunity to look at how you can use the market and the moves in the market to inform you as to whether your views in the market are perhaps correct, or maybe you should perhaps look at them again, and coming at moves in that kind of way rather than thinking, wow, the market sold off massively, I'm going to have to go bearish on the market, which is what a lot of people tend to do, and also what a lot of talking heads trying to kind of push you into doing. So that's what we're going to look at in this video. Okay, so first of all, summing up a fundamental point of view, I still have the point of view that the market is bullish, and a bunch of participants are still very bearish on the market, so the market will go up. That's the very basic fundamental point of view that I have. We had a sell-off at the start of this year, at the end of February into March, and historically, if you look at the S&P, which we've got here, this is the S&P all the way back to like the early 1930s. It has never had a sell-off or of over 10% twice in a year if it reaches a new peak. So this year in 2020, we had the big sell-off end of February, start of March, and we have now gone higher than the previous peak. So we've got reached all-time highs again. So statistically, it is highly unlikely that we will have a sell-off of more than 10% in the S&P in 2020 for the next few months. So that is maybe just one statistic, but it's something that is held true for almost 100 years now. And I think when you add that on to the idea that when you look on FinTwit or you look at all the talking heads, whenever there's a sell-off of more than a percentage or two, there's so much talk of crashes. Even when there are not sell-offs, there is still talk of when is the crash of 2020 going to happen. It happened in February. Obviously, this is not a sure thing because never anything is in the market, and we might well get a sell-off, but that's fine. That just means that the trade idea is incorrect, and that's going to happen once in a while. However, I like the idea that 100 years of data is in my favor when I think of the basic idea of, right, if there's a sell-off of any more than a few percent of the in the S&P, then we should look for buying opportunities rather than think, oh, that is a signal to look for a short. So that's one very basic, very simple, fundamental idea. And the other idea is that this whole rally has been led by tech. So I think that there's a good chance that the tech side of things would sell off really hard compared to the other areas of the market. So those are the two things that I'm looking for to tell me that that's, for starters, that that's a decent point of view to have. So we had obviously a decent sell-off from peak to trough. The lows there, it was a pretty much a 10% or so sell-off in the NASDAQ, which is a decent sell-off. Annoyingly, we had a big bounce on Friday. I would have preferred to have this finish near the lows and maybe early this week have another move down, which gets us to about 15% or so on the NASDAQ. However, we've already had the bounce, and that maybe shows that there's still a bit of froth in the market, and this next bounce may also fail. It would have been far nicer for bullishness for this to correct a decent chunk lower, and then we would certainly be really confident in our bullish call there. However, a nice thing happened. We had the NASDAQ sell off by over a percentage at the close there, and then we had the Russell 2K, the smaller small caps, and they sold off less. and the S&P as well. What was that? Sold off less as well. So that's confirming the side of things, which is thinking that it's the tech that really drove this market and that may correct a little bit harder than the rest of the market. And so not to be too worried about the sell off here. Some other things that confirmed that bullish point of view was we had copper here on Friday amidst that big sell-off, in the market. Copper made a really nice day. What was that? Up about over 3%. So one of its most bullish days copper had on one of the days that the market at one point was down 3% or so in the Nasdaq. So that's a really nice bullish sign there. Copper broke out from this flag here and was looking, if we look at what it was looking like there as we go into after that big sell-off on Thursday in equities that copper did go along with, we would expect copper to confirm further bearishness in the equities and move lower, but hell no, it didn't. It turned around and made a nice bullish reversal here. So it's already ticked up to that target of the flag break, but I reckon that's a good sign that this might go higher. Other things that happened, FX market just did not confirm the sell-off in equities at all. We're obviously, this is now Monday, later on Monday, so we've had a bit of action here on Monday. But look, this is CAD JPY, nice bullish reversal on Friday. Aussie yen as well. That was a really nice test there, and this is a nice setup here. Actually, I was in a long here anyway. I reached the original target, and sadly, I did get ticked out on the low here. I would really love a little low test here to get down to last week's lows. That'd be a nice area to buy. Just get all the week longs out, stopped out here, and get a buy in there. That's one of the trades that I would look at. However, the action today looks pretty bullish straight off the bat anyway, so we might not get a chance on that. But yeah, again, on Friday, that was a good hold there. Odd USD, again, it's just none of this really confirmed the bearishness on Friday. So we'll see how things develop. That was New Zealand dollar looking a little bit weaker today. But overall, FX just didn't carry on with the move that was being shown in equities. One area to keep an eye on is oil here. It did sell off, and there was some decent headlines that got it sold off here as well. I've actually taken a little long here, but it's only a small position because it is a bit of a speculative long. But I'm looking about the market, thinking, right, the rest of the market is bullish, and I reckon oil might be getting a little short flush here to get out some weak longs before blasting higher. So oil is one area to look at that it certainly is weak compared to the rest of the market. And silver gold ratio as well. If we were to get into some serious problems in the market, we would want silver to start really selling off and gold to start making some headway. Perhaps not against the dollar, because we expect the dollar to strengthen as well in a risk-off environment. However, we would expect gold to start performing better than silver. And yeah, there's it's not moved much, but there ain't been any move up in gold at all in the gold-silver ratio here at all. So there's plenty of signs there that are telling us that the basic fundamental idea that I've got there is correct. There's maybe oil that we need to look at, but nothing is for certain in the market. And actually, some of the best trades always come out of the times when things are feeling a little bit gray, a little bit like this fog out there, and we're trying to seek through, and we've got an idea, and it may or may not come right. But if it does, then that's when it wasn't obvious, and we've managed to catch on to a trade that then does pay off well. So that is where we are. As I said, Aussie yen, I think in that environment is one of the key ones to look at. Yet again on Monday, very low vol day. It's held up all right here, and if we knock down, so when you're looking at price action, this is obviously a nice little hold here at this breakout, and nothing much happened today on a low vol day, but then I do quite like sinking down to the lower timeframes and looking what's happened here. So this is potentially a flag actually here, because we've come down, we've made the initial obvious bounce, tried to bounce up. That was far too early to take that for a long straight off the bat. We've given a hard test here, and this doesn't look too bullish, does it? It looks like this was potentially a flag on the smaller timeframes, and we might go lower here. So this next run down into Tuesday and Wednesday, especially if the market starts to steady up across the board when the US traders come in tomorrow afternoon, this could well be a long to take here, taking into account everything that we've looked at, but also moving back to the original idea that we had, that we are bullish on the market. And it wasn't a crazy, mad thing of having to know everything about what's going on in the world. It's just a general point of view that then you can look at the signals in the market to confirm your point of view, or maybe make you think twice about it. That is all for today. I hope that the video was informative, and I hope you have a great trading week. Thank you very much.